Hey everyone, thanks for joining this video. In today's video, I'm going to be talking about upcoming earnings reviews from the week ahead in the stock market. I'm going to highlight some of the companies that I'm going to be looking out for and watching, looking at some of their price to earnings ratios, going into earnings, and just my thoughts overall on these companies, and if I'm interested in potentially adding it to my watch list, adding it to my portfolio. So before getting into this one, if you like this type of content, be sure to give this video a big thumbs up. It really helps a lot with the YouTube algorithm, so I really appreciate that. Looking at the week day by day, it's a pretty light week. Monday, the US markets are closed, so there's no activity going on. Going to Tuesday, there's a couple interesting companies. Fedex and Lazy Boy are both companies that I'll take a peek at what they report. We'll start here with Fedex. Fedex currently trading at $233, pretty close to their 52-week high, actually, if you look at their year range here in the bottom right-hand side. So just going to put a one-year chart on it. You can kind of see they were trading at that one-year high, had a dip. I think they had like a outlook change pretty dramatically, and they've just been building since there. So from September, this stock is up over 60%, which is massive. Currently pays a 2% dividend yield. Let's look at their earnings estimates. Their earnings estimate for the current year is about $15, and then wow, it's expected to grow almost 20% from this year to next year. So $15. This stock is trading right around a 15-ish, 16 times earnings ratio. So this has always been an interesting stock. UPS and FedEx has always traded, it seems like, at the low teens to mid-teens ratio, and just maybe a bit of a diluted multiple given the space they're in with Amazon, and if they ever make a big push in, as well as their exposure to just the broader macro economy in terms of moving packages around. So I overall have never owned this stock in the past. It's always been one that I thought was a fair value when it was in the low teens, and an enticing value. But just the fact that this one's absolutely ripped up about 60%. I'm not overly interested in getting into it, but I think the earnings call and just the quick sound bites coming out of the FedEx earnings will be really helpful in just understanding how the overall economy is going. So I'll probably still take a peek. Lazy Boy, obviously a furniture manufacturer. Looking at this stock over the last 1 year, they're up 20% as well. Looks like they've had a lot of volatility on the name, ripping up to 30, down to 20. Then looks like they cracked 33, and now down 20% again. So really interesting name. They pay almost a 3% dividend yield. Looking at their EPS estimates, this one's a bit of a different story. 360 this year, going down to $3 next year. So this year they're trading at like an 8 times. Next year, closer to 9 times. If you believe the low estimate, could be as high as 10 times earnings. So a really low multiple, but this company is in a space that no one really needs to be buying their products. More of a discretionary play, and also a more challenging industry. Lots of competitors in that space. So this one I'm just less excited about as an overall name in industry, and if the company's not playing in a place that you want to be in terms of an investor, the valuation almost comes secondary. So this one I'm probably not going to be buying, but it's still a brand name that I'm aware of. So we'll look to see what they do on earnings. If this company blows it out of the water, it probably means a good thing for the consumer as well. Going back to the earnings chart here. Oh, let me try to find it. On Wednesday, there really isn't too much going on either. A couple names reporting here: KB Home, Steelcase, Winnebago, but none that I'm overly interested in. So I'm pivoting over to Thursday. Thursday, we have Accenture reporting. It's a big consulting company. Darden Restaurants is a really interesting stock as well. So those are two that I want to take a quick look at. Starting at Accenture, this one has really cranked up lately with the broader market, up 20% in the last 6 weeks, trading at a $200 billion valuation. The earnings per share estimates at about 11 to 12 bucks, which means that this company is trading at a mid to high 20s multiple. For me, that's just a bit pricey for this type of business, this type of stock, and they are also very exposed to the macro economy, given their services and companies' willingness to spend on consultants and projects and stuff like that. So this is one that I'm staying away from. I'm just generally interested to see what happens to the stock. They're trading right around their 52-week high here. So I'd have to imagine there's more downside than upside going to earnings, but that's me not knowing the company overly well. Going into Darden restaurants, this one is interesting, up almost 50% in the last year. They actually just acquired a steakhouse, Ruth's Chris Steakhouse. It was a big acquisition for them, paying about a 3% dividend, trading at 21 times earnings here for a collection of sit-down restaurants. You can see here some of the other brands they own, Longhorn, etc. I think they also own Olive Garden, but I may be mixing up my... Oh yeah, Olive Garden there. I thought I may be mixing up my restaurant chains or holding companies. So a lot of good brands, but essentially all sit-down restaurants. They're expected to earn about $2 in this next quarter, $8 on the year. So $8 on the year, they're trading at 21 times current year earnings. Let's look at what they're expected to grow to. They're expected to grow about 10% in a good case scenario, so like 19 times forward earnings. For me, for a sit-down company and where their locations are and stuff like that, this one's just priced, frankly, too high for me. I think it's probably more fair to be a mid-teen multiple stock, given where multiples are on most sit-down restaurants, trading right at their 52-week high. So this is one be interested to see, similar to Accenture and Lazy Boy. But I think that the valuation of this company currently is at its peak, unless they deliver a higher earnings outlook than previously anticipated. And going into the last day of the week here, the only company here that I would want to keep an eye on is Carmax. I'll be honest, Carmax is one of those companies that I've never really understood, down 10% on the year. Over the last 5 years, this one's about flat. They don't pay a dividend. Looking at their earnings per share estimates, they're expected to do about $2.40 a share. The company is trading at $79. So this company is trading over 30 times current year earnings, about 23, 24 times next year earnings, assuming they grow at the very high pace that is expected for like a car retailer. So this one, I just don't get the business model, but this is not a company I'd pay 30 plus times earnings for. I imagine, if anything, they're should be trading at lower than a market multiple, given they're in physical retail and they're selling very expensive items that are going to get hit during an economic slowdown in terms of people not buying new cars or updating their cars as quickly. So this is one that I've never got. If you own Carmax or are bullish on Carmax, would love to hear the thesis in the comments, because this is one that I've always struggled with. But yeah, I'm just kind of waiting for an earnings report that this company crashes on, wondering if it's going to be this week. So looking forward to seeing what kind of numbers they post. Hopefully they do well. I've just never really understood why the market gives this stock such a high multiple. So yeah, that's the week ahead in earnings. Pretty light week. Nice that there's at least a couple things to keep an eye on, but we're really in the the dog days of earnings season between the really heavy weeks that'll come later in the summer. So thank you guys for joining me. Once again, if you made it all the way to the end of the video, be sure to give this video a thumbs up. It really does help with the YouTube algorithm, and not too many people make it to the end of the video, so really appreciate your support and for watching all the way through. I'll see you guys in the next one.